Intel's $16 billion gamble in a single quarter. Intel lost an astounding $16.6 billion. This was the biggest loss in the company's history, dwarfing even AMD's profits in the same period. Yet, surprisingly, Intel's stock price jumped 15% on the day this catastrophic earnings report was released. This paradox hints at a high-stakes bet being placed on Intel's future. For decades, Intel dominated the chip industry through a powerful combination of advantages. They controlled the x86 instruction set architecture, which became the standard for personal computers and servers. Their manufacturing capabilities consistently outpaced competitors, giving Intel chips superior performance and efficiency. And their profitable business model allowed them to outspend rivals on research and development. But Intel's decline began with a series of missteps. They passed on the opportunity to make chips for the iPhone, missing the mobile revolution. Their manufacturing edge eroded as they struggled to advance to smaller transistor sizes, while competitors like TSMC surged ahead. Intel also failed to diversify beyond CPUs as other types of chips, like GPUs and AI accelerators, grew in importance. These issues came to a head in recent years. AMD, long a distant second in the x86 market, suddenly became a serious threat. ARM-based chips, once confined to mobile devices, started making inroads in Intel's core PC and server markets. Intel's manufacturing troubles meant their chips were no longer clearly superior. The company that had dominated the industry for so long now faced existential threats on multiple fronts. Enter Pat Gelsinger, appointed CEO in 2021 with a mandate to save Intel. His turnaround plan is audacious and risky. Gelsinger aims to regain manufacturing leadership by developing 5 new chip manufacturing processes in just 4 years, an unprecedented pace. He's investing heavily in new technologies and facilities, while also outsourcing some production to TSMC in the short term. To fund this, Intel is spending aggressively, cutting costs, selling off assets, and seeking government subsidies. The progress so far has been mixed. Intel has completed its first 2 new manufacturing nodes roughly on schedule, and claims the critical 18 angstrom node is on track. Some new chip designs, like Xeon server processors, are showing promise. But there have also been setbacks, with cancelled chip projects, delayed expansions, and underwhelming products in some categories. Intel's future remains uncertain. If Gelsinger's plan succeeds, Intel could regain its position as the dominant force in chip manufacturing and design. But the risks are enormous. The company is spending vast sums with no guarantee of success. Investors and competitors are circling, sensing vulnerability. Some question whether doubling down on manufacturing was the right choice, rather than following AMD's path of focusing solely on chip design. As Intel attempts to climb out of this valley of death, the entire chip industry watches with bated breath. The outcome will shape not just Intel's future, but the future of computing and America's technological leadership. Intel's $16 billion loss may yet prove to be the price of admission for a spectacular comeback. Or it could be the beginning of the end for a once great technology giant.